Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
Here we go. Another episode.
Let's do it. We're back.
We are back.
Behind the Doors podcast. Marvin and Dan. Here we go, man.
I love it. Man, how do we feel right now? We're snuggling on the couch.
I know.
This is our first live guest together.
Yeah.
We had our first live guest, virtual.
Yeah.
But now we all on the same couch.
Yeah,
So this is awesome.
Here we go.
I'm full of smiles.
Noah's
today.
local, so we got it.
Comfy couch.
Excited, man. So we got Noah Brocious today from Capital Fund One. Appreciate you coming on, man, and sharing a little bit about your story and what you guys do. Super excited. I know you guys are the big dogs in the space, man. So a lot of our users or listeners, just so you know, they're range from real estate agents all the way to real estate investors, really of all walks of life. So we're covering everything from like the institutions, from the world I come from, into mom and pops and guys that are just getting started or listening to us. And so it's been fun. We've had a good time of just like coming in here and talking shop a little bit. So
cool.
Excited. Maybe just like to kick us off. Tell us a little bit about like how you got started in the hard money business. Cause it's a unique business and not like all that old really, it's kind of a newer business. So excited to hear about what you guys got going.
So I graduated from college 2003, had no idea what I wanted to do. They had on-campus interviews. I went to California Lutheran University, Thrivent Financial, offered me a job selling insurance, and I quickly learned that I wasn't good at talking to people about the last thing in the world they want to talk about.
Right.
So I did that for about a year, and then my buddy Justin, who went to high school with here in town, he and his dad were doing land development stuff. So Justin said, "Hey, come join us." So we were buying, selling land up in Rio Verde, down in Pinal County. So that was basically 04 to 07. Music kind of stopped there. I got the opportunity to work for a commercial developer in town, Panettone Development. So I was a development manager there from 07 to 09. Music stopped in the commercial world, and I was kind of out on the street trying to figure out what I was going to do. Mike and Justin hadn't sold me land in a while. They were trying to figure out, how to pay the bills, keep the lights on. Yeah. So they had started buying at the trustee sale auction. So Justin reached out like, "Hey, come hook back up with us." So we were buying, doing fix and flips. We probably did, I don't know, not a ton, maybe 25. And while we were down there, we met some guys that needed some capital for some deals. So we made a couple loans, took a step back and said, we really don't like chasing properties, don't like chasing contractors. A lot of properties to purchase back then, really not much capital available. So we decided to pivot and focus on the lending. So Mike, he had a couple $1 million liquid that we were using for the flips, sold all those, made a handful of loans, felt like the business had legs. Then we created our fund and started reaching out to friends and family to raise additional capital. So that was back in 2009. Wasn't something that I said, "Hey, I always want to be a hard money lender." Just kind of fell into it.
Right.
Love the business. So it's been a fun journey.
That's awesome. So, for our listeners, they maybe some don't even understand, what private money lending is. So in a nutshell, how would you describe, what you guys do?
Yeah, it's quick and easy, and a little bit more expensive. So you got to pay for the convenience. So the industry's changed a little bit. Used to be private money or hard money was all asset based. There's now that Wall Street likes our space, some private lenders aren't completely asset based, but we're still asset based, which means we don't underwrite the borrower, we underwrite the property or the project.
Right.
So way different than going to a traditional lender.
Yeah.
If like on a fix and flip loan, we need purchase contract, photos of the property, rehab budget, and experience. So we want to know, past projects that you've done, if any.
Yeah.
We don't check credit, don't need bank statements, don't need tax returns. I wouldn't even know what to do with all that. So we focus on the asset.
Yeah. Yeah, so it's like looking at the deal as if you guys were going to buy it yourself, right? That's the risk profile that they look at, and they go, hey, like, would we buy this deal? If so, we would lend on it, and then this person's going to put some skin in the game,
Yep.
as far as a down payment, and that's how they
Right,
get those deals off the board.
Yeah, and we just adjust our risk with the down payment. So if we really like a deal, we're going to require a little bit less. If we don't like it as much, there's times where we just don't like the deal and we say no, but most of the time we just require a larger down payment.
Yeah. On like a fix and flip deal. So I'm a newer fix and flipper, I guess. Maybe I've done a couple.
Yeah.
Like, what can I expect as far as like down payment and rates and stuff right now?
Yeah. So our down payments right now are going to range in the 10 to 20% range. Rates right now are 10.5 to 11%, and then we typically charge a 1 point origination fee for a 12-month note. Then there's no prepayment penalty, so you can pay us off at any time without a penalty.
You want to.
Yeah.
Yeah, do you guys
go ahead? Sorry. And what does that loan process look like? How easy is it for those investors out there listening?
Yeah, it's simple, and we cut our teeth on funding properties that were purchased at the trustee sale. So as maybe Arizona's a little different. Some states, California, Texas, you got to show up. You win the bid, you got to show up with all of it.
Right.
In Arizona, you put down a $10,000 deposit, then you have till 5 p.m. the next day to pay. So we kind of cut our teeth on that 24-hour funding. So we're still set up to do that. We fund trustee sale purchases here and there. But on average, our loans close in 3 to 5 days.
Oh, nice.
So as far as the process, like I said, for a fix and flip deal, we need, purchase contract, photos, rehab budget, past projects. Our goal is always to get borrower terms, same day or within 24 hours. Yeah. And then as long as title, buyer, and seller are ready to close, we can close the next day. Yeah.
And you guys lend on a lot more than just fix and flip now. I mean, this thing is evolved quite a bit. Yeah. So you're being a little modest on what you guys lend on.
Yeah.
I mean, I'm seeing Capital Fund One signs on new construction
land,
projects,
commercial, everything,
all kinds of stuff now. So you guys have expanded quite a bit.
We have, yeah. I mean, really, the only thing. I mean, we'll really consider any real estate as collateral as long as it's not owner-occupied residential. So that's considered a consumer loan, Dodd-Frank Act, Tiller, RESPA, all that ability to repay. So we'll really consider anything that's not owner-occupied residential. So, like you mentioned, we still do a lot of fix and flips, make bridge loans on residential rental properties. We'll lend on land. We'll do commercial bridge loans, and then we do construction as well. Yeah. Primarily single-family residential, but like we've got. I think it's our largest loan right now. It's a borrower we've done business with for last 12 years, Canadian developer. He bought a parcel up on the Scottsdale Air Park, and we did a construction loan for 4 hangars that he's building up there. So yeah, we'll do a little bit of everything. If it makes sense, then we'll do it.
What about rehab? Would you do rehab loans as well?
Yep, we do. Yeah. So on fix and flips, we'll either just fund acquisition or we'll do acquisition and a holdback for rehab. And on those loans, we'll typically go up to 85% loan to cost.
Yeah.
On the rehab loans.
Yeah. I was on a call yesterday, so I was shadowing one of our salespeople, and she had a lender, question come up, and the buyer asked her, could I need, I've got the money to buy it, but I don't necessarily have the money to like renovate it. And I was like, easy. These guys will lend all day on this, right? Yep. They're lending on rehab. And this guy, his mind was blown. He was like, so you're telling me all I've got to come up with is the down payment and these guys will help me fund the rehab. And I'm like, now keep in mind, right? I've seen a lot of guys, you probably have seen a million of these where the original rehab budget is not exactly the final rehab budget, right? And so like you're going to establish it in advance, and they're going to lend up to that amount. If you blow the budget, you're on your own, pal. So you got to be careful with that. But as a newbie, I think that's something to keep.
Yeah, in that scenario, there's times where if the budget gets busted for whatever reason, we'll relook at the deal, and if we're comfortable, we'll increase the loan amount. But typically, it's kind of on the borrower.
Nice. Yeah. And you guys are now beyond Arizona. Like you've expanded outside of the state too. Yeah. So where else are you guys lending?
So we're Arizona, Colorado, Texas, Tennessee, and Georgia.
Wow.
So those are the five markets that we're in, and we've got offices in all those markets. So we've got boots on the ground.
Sweet.
in all those states.
So do you guys then send somebody out to drive every property you're going to lend on?
Yeah. So we started using back in probably 2011. There was a courier company that we were introduced to that one of the people, or a few people that were buying at the auction, they had kind of trained them to go drive all the properties that were going to sale that day, and they had a little report, take photos,
the drive reports.
The drive report. So we still use some different courier companies if it's just kind of a smaller deal, not a big rehab deal. So either we'll send one of those companies out, or there's actually a new company. It's called I View It. It's basically like Uber for property drives.
Cool.
So you kind of go in, plug it in, one of the drivers picks it up.
Yeah.
So either we'll have one of those companies do it, or one of the people on staff will go drive or walk the property.
Check it out for it.
Yeah, but yeah, we always get eyes on the property before we make the loan.
Right.
Now, I do want to brag about your team real quick because I got a chance to meet several of your employees.
Yeah.
They're awesome to work with. We spend a lot of time talking about building the right team. Your team is easy to work with. Could you talk a little bit about how those core values translate into investors' experience?
Yeah. I mean, the main thing is, no assholes allowed. I mean, gotta, if we hire somebody, it's somebody that, we like and would want to hang out with, because ultimately, they're going to be dealing with our customers, and we want to make sure we got good people.
Yes, sir.
But yeah, it's really just finding the right people. And, sometimes, you hire somebody and it doesn't work out, but because we have a really solid team, they quickly, self-select when somebody gets through that isn't somebody that we should have on the team. But yeah, we got a great team full of energy. I mean, I think I'm probably the oldest person. So we got a younger team full of energy.
Nice.
But yeah.
How many total people do you guys have?
So we've got 90 employees now.
Wow.
Yeah.
It's huge.
Yeah.
That's huge. So what does somebody do? Like, are they looking at loans? Are they, reaching out to new buyers or borrowers? Like, all the above?
Yeah. So we've got our marketing team.
Yeah.
We got our sales team. We've got our underwriting team. So that's the team that evaluates deals and kind of determines the loan amount we're comfortable lending. Then we've got our loan processing team. They coordinate with title, review the title report, draft docs, get the deal closed. Then we've got our loan servicing team. Right now we've got about 2,100 loans in the portfolio, and we service all of those. So that team has definitely grown over time. We got our accounting team. We got our IT team. And then we have our capital management team. So for our fund, we use 4 different credit facilities to leverage the fund or the equity that we've raised from investors.
Yeah.
So the capital management team manages those credit facilities.
Yeah.
So yeah, we try to do. I'm kind of a recovering control freak, but I still like to control as much of the process as possible.
I know the feeling.
Yeah.
Yeah. I know the feeling. Yeah. 2,100 loans though. I mean, is that average on average what you guys have out there? Somewhere around 2,000 or?
Yeah. We've got about 880 million out right now. Last year, I think at the high point, we had almost $1 billion, about 950 million. Payoffs kind of picked up.
Right.
But yeah, our goal this year is to break the $1 billion mark, which would be pretty cool.
Yeah, that'd be fun.
Yeah.
That's awesome. We've come a long way from $2 million.
It's crazy, man. Yeah. I look at the numbers sometimes. And I'm just like, man, how did this happen?
How did this even happen? Yeah. That's awesome. Well, I think you guys do it right? Like, I mean, the experience for me has always been, I call, hey, I've got a deal, send over the stuff. It's funded in 3 days, 5 days, and it's never like the term sheet comes over and it's super simple. It's not like you need to be a rocket scientist to read it. And, here are the terms. You like it? Great. I mean, move on. And that's just how it works. So are you guys also doing the DSCR loans and stuff too?
We are.
Okay.
Yeah. So that's, that's a different pool of capital. That's not, we don't put that in our fund, but we are doing a decent amount of those. And it's funny. I bought a rental property the other day, and I got terms from our DSCR guy and, my mortgage guy.
Yeah.
And I think with my mortgage guy, it was like 8.15%.
Yeah.
And then the DSCR loan was maybe 6.7%. So
the terms are good there right now.
Yeah, pretty competitive rates right now.
Yeah.
Those take a little bit longer to close. So a lot of times a borrower will come to us, they'll use our hard money to close it,
Right.
and then they'll refinance
Refi
into the
a
DSCR loan.
Yeah. Yeah, that makes a ton of sense. That's awesome.
Yeah. Will you work with new investors, or do they have to have a portfolio before they come to
No,
you?
yeah, we'll definitely work with new investors. I mean, if it's a new investor that wants to do a $500,000 rehab and, addition and tear down walls, probably going to be pretty conservative on something like that. But as long as it's a simple, straightforward kind of paint, carpet, kitchens, bathrooms deal, we'll definitely lend to new investors. Yeah.
Yeah. What's the, from a lender's perspective, what's the default rate on stuff like this? Like, you guys see a lot of default in what you lend, or not really?
Yeah. I mean, I think it's, if you don't have any loans in default, you're probably being too conservative. Historically, our default rate's been about 3.9%. Last year, obviously interest rates spiked in 22.
Yeah.
In 2020 through second quarter of 22, our default rate was like 1%. So it was almost nothing, because if somebody got in trouble, put it on the market, somebody's going to buy it. The market was bailing people out. So, the fallout from that was that our default rate did increase. I think the highest it got was about 6.5%.
Yeah.
Right now it's at about 5%,
Yeah.
which we're comfortable with. But that just means we've started foreclosure.
Yeah.
Typically, a lot of times we learned early on that you can tell a borrower till you're blue in the face, you got to make your payment. But once that notice gets filed, they say, okay, they're serious. And they find the money in the cushions of the couch and make the payment. So typically, if we start foreclosure, it doesn't end up going to trustee sale.
Yeah. Yeah, I think the other thing too is, like, maybe a lot of our users haven't gotten one of these type of loans before. The payments are made every month, so even though interest is accruing, you're making the payment every single month,
Right?
And so that's where that default comes into play. These guys start missing payments, or rehab budget gets blown. Next thing you know, they don't have the money for their hard money loan. It's like those are tough situations. So.
Yeah.
How about upfront fees? Because I know a lot of listeners are now like, I'm excited. Sign me up. No credit check, all that fun stuff. Let's roll. But how about fees, upfront cost?
Yeah, we just charge an origination fee. So nobody's paying anything unless they close a loan with us. Depending on the loan, we're going to charge anywhere between 1 and 3 points. A fix and flip deal, typically a point. If we're doing construction or land or commercial, we'll typically charge 2 to 3 points, of depending on the term.
Thank you.
Nice. Yeah. So let's pivot a little bit. What do you guys think of the market right now? Like, what's going on? I mean, you guys as a lender with almost $1 billion of risk sitting out there, I mean, you must have a pulse on what's happening in the investment world, and what deals are good and which ones are not.
Yeah.
How are you guys looking at the market right now? What do you guys
I mean, I think, we're through 2024, we're through the election. I mean, like I said to a lot of people, I think 2024 is going to be a wild year. I don't think it's going to be that wild. Assassination attempts, it's hot swaps, like all sorts of going on.
Yeah, going on.
I think we're glad it's over.
Yeah, oh, for sure. Yeah, it was fun to watch. But so I think we're through that. I think there's generally a little bit more optimism right now. I was just at a continuing education class, and Fletcher Wilcox was kind of going over some stats, and he was talking about the same thing. Like, generally there's more optimism, but we still have higher interest rates. And I think, I think for us at this point, or the way we're seeing the market, as long as you buy it right, it doesn't have value detriments, you do a good job on the rehab and price it competitively, you're going to sell it.
Yeah.
So that was one of the big things that we kind of learned, with the major market shifts in 22. Like, prior to that, value detriments didn't matter, because there was a little inventory. People needed a house, they're going to buy whatever.
Right.
Once inventory increases a little bit and buyers can be more selective, if it's on a major road or front and back and sided to commercial, those value detriments really get hit. So we're being more conservative on that kind of stuff. Tertiary markets too. Yeah. That's the same thing. But long as, if you're buying right, doing a good job on the rehab, not too much inventory in the area, we're seeing borrowers be pretty successful these days. Yeah,
we were talking earlier about a property I just renovated and sold, and I got it under contract this week. And to me, it's like, I look at the market and I'm like, well, the quality remodels are selling.
Yep.
Right. The stuff that is not, not in the greatest condition or maybe dated condition, stuff like that. Now that the buyers have options, they're going, I think I'll pass on that.
Yep.
And I want to go after this new stuff, which to me seems like this is a really good opportunity to be a flipper right now and like get into the business, even like small margin flips. Like there's hundreds of those out there where you can get into a deal for, 20, 30, whatever $1,000 spreads in some of these deals that maybe weren't as interesting, 2 years ago when you could still see $80,000 rips on a bunch of deals. But you can make a business now doing, $30,000, $40,000 flip deals just by cleaning properties up and like making them nice again. That's what the borrower seems to want, buyer.
Yeah, because the day of somebody buying a fixer upper, I mean, there's still some people, but for the most part, people want a new or, quasi new or renovated home.
Yeah.
And, most people want to be in infill locations. We all know all the new builds are on the outskirts.
Right.
So if somebody wants a new home in an infill location, they got to buy either a new build spec or a flip.
They got to do it. Yeah.
Now, are you guys looking to expand in other markets?
Yeah, we've got some other markets on our radar. I'd say North Carolina would probably be the next market. I mean, I'd love to see interest rates come back down a little bit, mortgage rates come down. So don't have immediate plans of opening new markets, but yeah, when we look at new markets, the main thing is it's got to be lender friendly. So we want to lend in non-judicial foreclosure states. Totally. So it kind of limits the amount of states that you'd focus on, and then just from enforcing documents and evicting tenants, we like to be in a little bit more red states. I mean, there's some areas like Houston in general.
Right.
I mean, we foreclosed on a property. I think we had to evict a guy 4 times, just because certain areas are a little bit tougher to deal with. So you kind of gotta look at from every different angle. Yeah.
Yeah, I was an REO listing agent for a while. During that whole heyday, and I would go to like conventions or meet other REO listing agents from Fannie and Freddie at different markets. And they would tell me these stories about like the process to get these people out. And I'm really? I don't do that at all. I call the sheriff. That's, they're moving people out. And I'm in the property the next day taking pictures. They're like, unbelievable.
Yeah.
So
we're spoiled in Arizona.
Yeah, this is a pretty friendly state for that. So
absolutely.
Definitely friendly.
All right, should we have some fun?
Yeah, let's do it.
Have some fun with our guests, right?
Yeah, let's do it.
Got any good horror stories for us as it relates to lending? Or what are some creative ways folks have used lending that blew your mind?
I do have some good stories. I got let's see, one, the guy, he had gone to another hard money lender. He owned 24 properties, free and clear. Went to one lender, I think borrowed $2.5 million. Real estate was probably worth $6 million. Broker brought us the deal. Hey, this guy needs another $1 million cash out for his business. And we looked at him. We said, yeah, we like the loan to value. So I think we secured 22 of the properties. So we lent $3.5 million, whatever. The borrower came back and said, hey, I need another $500,000. I have these other 2 properties I'll put up as collateral, and we liked it, so we made the loan. Fast forward, so he made payments for probably 5-6 months. He calls me one day, or I called him because he hadn't made his payment. I said, hey, what's going on? And this was back in 2014, so a $3.5-4 million loan was pretty big based on our portfolio size. So he said, hey, meet me at Albertsons in Peoria. I was like, which aisle? And he's like, oh, there's a Starbucks there. I was like, okay. So I met him there. Which aisle? And he looks at me and he goes, I just need $500,000 more, and then he's going to send me the gold. And I said, what? What are you talking about?
Oh.
He's like, I just need $500,000 more. You got to lend me $500,000 more because I'm going to send it to him, and he's going to send me the gold. And I said, have you been sending all this money that you've been pulling out to buy gold? He's like, yes, I just need to send him $500,000 more. And I said, dude, please do not send this guy any more money.
Right.
Anyways, fast forward.
Wow.
I said, dude, you got to make your payments. Buried his head in the sand, filed BK, ended up we got the stay lifted, foreclosed on everything.
Wow.
So that was an interesting one. Yeah.
Ooh, wow. That's a great story. Wow.
Yeah,
It's not great for him, but that's a great story from our audience. Wow.
We also, I won't go into,
Careful buying gold.
Won't make it too long, but it was a guy who had the naming rights to a country bar, famous country singer here in town. Anyways, he would open them, wouldn't really pay people. He would basically get the landlord to write him the check for the TIs.
Right.
So he'd find a 20,000 square foot building, get a $1.5 million check, said, hey, I'll get the TIs done, pay the contractor. He didn't pay the contractor, opened it up, didn't pay the employees, and then he was taking that money and buying real estate and then using us to use some leverage. Right. So we were making loans, he was paying, everything was great.
Yeah.
And then
you guys didn't know he wasn't paying the landlord or whatever?
Yeah, no idea. So he made his payments, he paid everything off, and then an article came out in Arizona Central, and he was in witness protection. He was a hitman for one of the families in New York. And anyways, fortunately, we got paid off on everything. Everything was fine, but I was like, oh my God, I was lending that guy money.
Oh, man.
I thinking back on some of the conversations, maybe I would have been a little softer with, with how I spoke with him. But those are a couple.
Those are some great stories, and kudos to you. I would have never met anyone anywhere. So I don't give a damn aisle 6 or Starbucks, but to meet somebody at Albertsons to get the gold, that's my favorite story of all time. So thank you for sharing.
Yeah,
congrats on all your success, by the way.
Appreciate it.
You guys are kicking butt. So again, I think for the audience listening, it's about building the right team. And, our friends here at Capital Fund One are an amazing team to partner with. And so, Dan and I teach and talk about this all the time. Put data behind your decisions, but also get the renovation budget right, get your ARV correct, and also get your loan correct. So
you got to get the right team together, right? If you're going to be an investor in this space, it starts with, you got to have the right acquisition people to help you secure you got to be careful who you buy from, right?
Yeah,
100%.
That's one. Then you got to get the money to do these deals, right? I think a lot of people think that they need millions to invest in real estate, and they don't, and I think that's awesome. So how do they find you? How would any of our listeners find you guys?
Yeah, go to capitalfund1.com. We've got contact info for folks on our team. You can submit a loan request online, or you can reach out to me direct, Noah at capitalfund1.com, and I'll get you in touch with the right person.
Sweet, man.
That's awesome.
Awesome. Well, we appreciate you being on.
Yeah,
Thanks for joining us.
Thanks for having me.
Podcast.
Appreciate you, buddy.
Yeah,
Thank you so much.
Awesome. Thanks a lot.
All right.
Thanks, man.
Yeah, you got it, man.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.